Hi everyone, my name's Mark Quinn. I'm a tax advisor and chartered financial planner based in Portugal. I help expats relocate here and plan their financial, tax, investment, pension affairs accordingly. And in this video I'm going to look at the 3 tax regimes that are available to expats in Portugal at the moment. Now 2024 is a slightly unusual year in the sense that we're in a transitional year. The old Non Habitual Residence scheme was closed with effect from the end of 2023, but there's still transitional rules applying for the rest of 2024. We saw the introduction of a new regime with effect from the 1st of January 2024, and we also have the standard tax regime applicable to standard Portuguese taxpayers. So in this video I'm going to give a quick overview of the 3 different tax regimes and what it means to you as a potential new resident to Portugal. So the first regime is one that you're probably familiar with. I've done quite a few videos about this in the past, and there's lots been written about it in the press and websites, etc. And that's the non-habitual residence regime. Now, this was introduced back in 2008, and just to recap the benefits, it gave those that qualified a 10-year period where they could structure their affairs so that they'd be paying little or no tax. It was very simple to qualify in the sense that the only real condition was that you haven't been a tax resident here in the past 5 years. So as long as you could demonstrate that you've been paying tax elsewhere in the 5 previous years, you're effectively in. There was no sort of occupational criterion that you had to fulfill to get into the NHR regime, and in fact a lot of people that were in retirement were attracted to the regime. So just to recap the benefits of NHR, it gave people 0% tax on their pension income if they got into the scheme prior to April 2020. If they got into the scheme after April 2020, the pension tax rate was a flat 10%. It also gave NHR residents the ability to take income and interest as a general rule tax-free here in Portugal, and also capital gains tax on properties, foreign properties. So any non-Portuguese properties, any capital gains arising from the sale of those properties was also tax-free here in Portugal. One thing it didn't actually work for, and this is important when we contrast the new scheme, is capital gains tax on shares and investment portfolios, because NHR wasn't really geared towards capital gains producing assets. It was more an income focused scheme. And so if you were realising gains on the sale of shares, unit trusts, ETFs, etc., they would have been taxed at 28% flat as a Portuguese resident, and that's the same with or without NHR, so it doesn't give you any benefit in that respect. It also benefited people that were still working, because there was this high valued activity list whereby if you fit into one of those occupation classifications, you could benefit from a flat 20% rate of income tax on any earned income, which was very attractive, especially if you compare with standard rates, which go as high as 48%. Now, the NHR regime was actually closed, so the government announced in October 2023 that the NHR scheme would end with effect from the end of 2023. So from the 1st of January 2024, there couldn't have been any new applications for the NHR regime. But the government did introduce some transitional rules. So if you were in the process of moving to Portugal late last year when the changes were announced, it would still be possible to enter the scheme. And we've written about this in the past. I'll put a link to an article we've done on this topic, and it gives you the breakdown of the transitional rules and if you can qualify for them. But we're in this position now whereby even though NHR has ended, during 2024, some people that meet that criteria, that list, may still be able to get into the NHR regime. So I'd encourage you to read that article, because there still may be time, a limited window which is quickly closing for you to get into the old NHR regime. So then we come on to the new NHR regime. It doesn't really have a name yet, so some people are calling it new NHR, some people are calling it NHR 2.0. But what it is it's a similar scheme in some respects to the old NHR, in the sense that the main qualifying conditions are that you haven't been a tax resident here in the last 5 years. You can't apply for the scheme if you'd previously benefited from NHR, but it's going to be a bit more restrictive than NHR in the sense that you have to fit into one of the occupational classifications. So whereas NHR, you could come here irrespective of what you did, or even if you were retired you could qualify for NHR. Under the new regime, it's largely going to be geared towards people that are still working, and also it's targeting specific classifications of occupation, mainly people that are operating in the scientific innovation and research space. We are going to do a bit more of a detailed video on this, so I'll elaborate more on that separate video. So although at first glance it looks like it's going to be much more restrictive in the number of people that will qualify, there are certain opportunities that we're spotting within the legislation that could apply for people that aren't necessarily operating in those scientific research and innovation fields. Now, it's early days because the legislation was only introduced with effect from the 1st of January this year, so this video is being recorded on 10th of March, and we're working with tax lawyers to look at opportunities for those people. And one opportunity we've identified specifically is for those that are running businesses in the UK, and it could still allow you to get into this new NHR regime. So what are the benefits of the new regime? Well, there's a fundamental difference between the new NHR and old system, and the fundamental difference is a massive one really, because what it's saying is all foreign income and gains would be tax-free if you can qualify for the new NHR regime. And that's quite different from the old system because, as I mentioned, one of the fundamental disadvantages for a lot of our clients was that if they held share portfolios, ISAs, ETFs, unit trusts, etc., they would always be subject to that 28% capital gains tax on any gains realised or any switches made. Under the new system, again, all foreign income and gains will be completely tax-free, so it could be an amazing benefit for some of you. The only exceptions to the tax-free nature is on pension income. So this is a fundamental difference between NHR, which gave the flat 10% tax rate. So pension income will be subject to normal progressive tax rates. So you work through the progressive bands whereby the more income you earn, the higher the tax rate goes. And the other exception to this tax-free status is on income deriving from blacklisted jurisdictions. So the most common blacklisted jurisdictions we come across from a UK context would be the Channel Islands, Jersey, Guernsey, also Isle of Man and Gibraltar. So any income coming from those will be taxed at 35%. So what happens if you can't qualify for either regime and you go into System 3, which is standard Portuguese tax residency? Well, being a Portuguese standard tax resident isn't necessarily a bad thing. Portugal doesn't have inheritance tax. Inheritance tax was abolished in 2003. It doesn't have any form of succession tax or gift tax if you're leaving it to your spouse or direct line descendants or ascendants. And also succession tax, the one that does apply here, only applies to Portuguese based assets, so it's very territorial. So if you're considering foreign assets, again, it's not an issue, so we see it very limited in its application. There's no wealth tax here in Portugal, and income tax in many ways is similar to that in the UK. Now, admittedly, the income tax bands do kick in at lower income tax levels, but from experience dealing with standard Portuguese taxpayers out here, the income tax levels really are much of a muchness between the UK and Portugal. Now, obviously, that's very family and individual specific, so you've got to do an individual analysis of your own situation. But we tend to find that the overall comparisons are neutral. And the final point is that if you're structuring your wealth or living off investments, Portugal can be a very attractive place to live, and you can be getting your effective tax rates down to as little as 3 to 5%. Very much related and dependent on the level of growth you build up in your portfolio. But we find that there's lots of happy clients that have been here for a long time, and they're standard Portuguese taxpayers, and they're paying very low levels of tax. Obviously, advice and financial planning is key, so if you do want a review of your individual situation and how Portuguese tax would affect you, please do get in touch.